Let's talk to Nicole Elliott. She is a private investor and technical analyst, according to my notes. Very good morning to you, young Nicole. Right, we go into Easter. You've sent 3 very thought-provoking charts. Without further ado, let's kick off with my favourite subject at the moment, Facebook. Now, I haven't used Facebook for years, but obviously it's hitting the headlines at the moment.
Absolutely, and in fact I'm surprised that you haven't used Facebook, because they've got a problem, because it's the youth which are abandoning it in droves and have been going on to Snapchat and things like that, and it's the ageds and the grannies who are on Facebook keeping up with their grandchildren.
Thank you very much, Nicole, and happy Easter to you.
Okay, all right. No, in fact, it is in the news and we know why. But what I'm absolutely gobsmacked about is the Cambridge Analytica whistleblower, Christopher Wiley, he of the pink hair. He was actually studying for a PhD in fashion trend forecasting at the London School of Economics.
Okay.
If only I'd known they taught that, I would have done that years ago.
Very good.
I mean, can you believe it? Anyway, his idea, he's brilliant. The chap is just obviously clever, but basically he believes that politics is actually downstream of fashion. And how to sell somebody something revolting like a croc shoe or an Ugg boot.
I think that's harsh.
And how to get it into, from ugly to want to have. That's what he was doing. So that's the thinking behind it all. Anyway, he's now spilt the beans and said they'd harvested I don't know how much data. And you can see that Facebook chart has taken a tumble. Okay? And we'd actually peaked well before the news came out. That's the interesting thing.
Okay.
And the news came out almost a fortnight ago. And you can see on the right-hand side how we gap lower on the news. But we'd already peaked a good 6 weeks before that.
Because this is a weekly chart, isn't it?
Correct. Sorry, I should have explained that. And what we've got here is a double whammy on the chart. At the record high is the head of a slightly crooked head and shoulders pattern.
Which is a bearish technical formation.
And that horizontal line is its neckline. And already last Friday we closed well below that neckline, well below the 50-day moving average, which is the blue one that's just started turning down, and well below the 200-day moving average. So that was already a week ago. You've got plenty of warning. Now that head and shoulders marks the highest point of broadening top formation.
Which is a bearish technical formation according to textbooks.
Correct, and that's the sort of, sometimes I call it a megaphone, and you can see the 2 lines that brand it. And what we're doing right now today, and let's not forget, this is a holiday shortened week, so where we close tonight is terribly important. But we are hovering with the bottom of the megaphone. We're very close to the Fibonacci 38% support level.
Okay.
And we're still above the long-term trendline support. That's taken from a low in 2013. So it's not the end of the world. It's not toast, but it's close to. And you've already had a nasty week. So what I'm going to suggest to our viewers is, as at the close of business today, or even better, on the 1st of April, Fool's Day, you have a really good look at your charts of the FANGS, particularly. And of course, these are influencing the major indices. They've got to. They've been the power horses.
Well, they've led the market, haven't they?
They are the market. I mean, the rest of them are sort of faffing around, aren't they? Anyway, so that would be my suggestion for Facebook. I would really not be interested in buying it. Now, what I'm now looking at is Amazon. And the reason I'm looking at these is that while they're all lumped into technology companies like Tesla and things like that, the ones I'm looking at today are actually big data. That's what they really are. And that's where the threat is coming from them, right? In harvesting personal information, people's choices, what they want to do, what they want to see, where they want to go. And Amazon is very much at the forefront. Now this, I've got a monthly chart here.
Right.
And you can see that this year, its candlesticks are very different to what they were throughout 2016 and 2017.
So an inconsistency within the uptrend.
Correct, absolutely. In other words, we've had tremendous acceleration. We are well above the 50 and 200-day moving averages. I haven't even drawn them in. We're well above the 38% Fibonacci retracement taken from the 2016 low. So do you know what I mean? We're comfortably in bull market territory still, but only just. And the reason you're only just is January was a giant upward move, a lunge. That's called a Marabuzu, that tells you that the nature of the beast has changed.
Okay.
February is a hanging man candle with a very, very long dangly bit at the bottom.
Yep.
And his head is a decent size. It's a very powerful candle again.
That's a reversal formation.
It's warning you things are not right. They're not steady. It's almost like the final burst, the final acceleration in a secular bull market.
Okay.
I think that's what we're seeing.
Right.
And this is the first sign that things are not right, where you've got a sort of shooting star in March. And it'll depend where we close as to whether it looks like a shooting star. It's also sort of a little bearish engulfing pattern to February's body. Yeah. So it's not perfect, but you can see there are elements here that suggest that this quarter we have formed an interim peak.
Okay.
Possibly not an all-time high.
So the important thing
interim.
is we don't have a clear sell signal, but people should be basically thinking about reducing any of their longs or working out where their stop is on their long positions.
Very much so, Moose. This is think time, strategy time. Don't throw up your head, throw your hands in your
it's
air,
going to go up forever.
and just think tactically.
Okay.
And my final one is Google, now known as Alphabet. This is a quarterly chart, because that's the other thing. Today is the end of the quarter, the first quarter, okay? And I've drawn on the 200-day moving average, which is that blue line again.
Okay, so that's holding the price action quite well, isn't it?
Well, we're sort of possibly going to close below the 200-day moving average.
Okay,
possibly.
Which is only kind of done once since 2015, I would suggest.
Well, exactly. It's on the whole that line has it's not perfect because I'm using a quarterly chart, so it's a slightly skew. If we're also on the 38% retracement again from the 2015 low. Watch out. But what you've got here is a perfect, massive shooting star candle. Okay? The uptrend, the upthrust that December, January, February, well, the previous 4 quarters, in other words, throughout 17 was much steadier. This one is different again. So we're getting the parallels. And what we're looking for here is something called fractals, where the big picture is very, very similar to the next scale down and the next one down, right? And similar instruments are mirroring each other. And I think we've got that here quite clearly.
Okay, so it's definitely a time where the fundamentals are in line with the technicals.
At last.
At last. On that note, Nicole, happy Easter. Thank you very much for your time.
Thank you.